Hi, I was having my hair cut the other day when Harry, my barber, said, Michael, I'm going to get into property investing. I'm going to make a fortune because I've learned to invest like the pros. Now, each time I visit Harry, the conversation always seems to revolve around property. But when I heard Harry say he learned how the pros do it, I was concerned. Look, I know Harry's been reading every book about property he could get his hands on, attending lots of seminars, watching all those free DVDs the property marketers are sending out. I also know Harry, while he enjoys his job, he's sick of the rat race. He's sick of trading his time for dollars. And through our conversations, I know he feels he's missed out on that last property boom, and he wants to make up for lost time. He wants to get rich quick. In the past, when we discussed property, Harry was scared to take on more debt, and he was scared to get into property. Instead, he paid down his mortgage, the mortgage on his home. Now, while he has the security of minimal debt on his home, he feels he's got to catch up with many of his friends who took the plunge into property a few years ago, and now they own one or two investment properties. Now, of course, last year, as our property markets turned, I recommended that Harry use the equity in his home to get into property investment. But at that time, the memories of the global financial crisis were still pretty new, pretty raw, and so it held him back. But now, armed with his newfound knowledge, Harry was feeling confident enough to finally take the plunge into property. So when Harry told me he knows how to invest like the pros, I had to ask, okay Harry, how are you going to do it? Easy, he said. I've been to a seminar and I signed up for a course. Then he pulled out this ad, an ad in one of those property magazines that attracted his attention. It promised the ability to control millions and millions of dollars worth of property with none of his own money, and actually by bypassing the bank. And interestingly, it also explained how the course presenter had made millions of dollars in just 7 days. At that point, I felt sorry for Harry, and for the thousands of novice, and I guess some experienced property investors who are going to be taken by a new breed of property spruikers who are once again out in force. Sure, the promises sound enticing. The opportunity of getting life-altering fortune overnight by barely tapping the easy button as you breeze through en route to your lounge chair on the beach. But why 7 days? Why not 7 hours or 7 minutes? Now, of course, I'm being sarcastic. You can't become wealthy in 7 days. You probably couldn't even read the course material in 7 days. Nor can you earn or sustain wealth in a 4-hour work week, as others promise from their courses. Just look at the ads. We'll teach you how to buy a property to renovate and sell at a profit. It will give you a great replacement for your job. What they don't explain is how after tax and GST and stamp duty on your next property purchase, you're going to be left with very little, if any profit. Now, there's also a course that teaches you how to develop 4 properties, sell 3 and keep 1 debt-free. But they forget to mention that the banks aren't lending to property developers at present, especially to ones who've learned their craft from a DVD course. What about the seminars that are currently recommending buying American properties? Sure, properties in America are cheap, but those courses forget to mention that 30 million vacant properties in America now. And they forget to mention how about 20% of homeowners in America have negative equity in the USA. The problem is that this nonsense, that you should expect childishly simple microwave instant solutions to what I'd say are complex opportunities, and when you don't find one in one place, you just rush off to the next pretender peddling it. That's what's stopping the average Australian from becoming wealthy through property investment. The idea of instant, simple and easy has ridden from being laughed at, being ridiculed, to being the expectation and entitlement of a new generation of property investors. Here's what the real pros know. You can't create wealth through property overnight, but you certainly can become very rich in the medium to long term by knuckling down and seriously applying yourself in a dedicated, disciplined and persistent way. You get there by following a proven system and by having a safe property and finance strategy. You then implement this by buying the right property, in the right location, at the right price, and then holding it for the long term. Not by adding hot water to a packet of magic beans and counting to 7. Now yes, you can and should accelerate the process by learning the strategies of valuating through renovations or development, but you can't skip the fundamental process. Now, while property spruikers went quiet during the recent real estate downturn, unfortunately the new property cycle is bringing out a fresh group of what I'm calling property pretenders. There are now property experts out there selling advice and courses despite never having built their own property portfolio. This makes it timely to remind readers that seminars that promise easy wealth through property have all too often led to financial ruin. It wasn't really that many years ago that Henry Kay caused 13,000 consumers to lose over, it was about $60 million after attending his seminars. Now, to be clear and reconcile my position, I've been conducting educational seminars for years too, but I don't have any properties for sale at the back of the room, and I'm not paid to make a particular property developer's project look favourable. And I don't, and I have never promised instant riches. Sure, I sell the services of the property professionals at Metropole, but they're independent and unbiased. And that's an important differentiating factor. If you're going to listen to somebody's advice, make sure it's unbiased and not self-serving. Be even more cautious if people are willing to offer you advice for free. And if it sounds too good to be true, it most likely is. Making things worse today is the internet and the mindset the internet has produced, which puts born yesterday pretenders and academic theorists on the even footing with long-established experts who painstakingly amass their knowledge and have proven it over time in the real world. See, what has happened is, in their haste to hitch on this new property boom, many beginning investors have chosen to devalue credibility in favour of believability. Okay, what's Michael on about? Let me explain the difference. Credibility requires education, experience and track record and proof of value, all things produced by an investment in time. On the other hand, believability only requires the ability to create a belief. And that's so much easier today with a fancy website or a glossy brochure. I've recently come across a new firm that's pretending they're Australia's largest buyer's agent. Despite having a small team, they pretend that they've got offices in most states, of most capital cities, and even in New Zealand. Unfortunately, I'm sure their glossy brochure and fancy website impresses lots of potential clients. Then there are these seminars that make outrageous promises. Come to my course and I'm going to teach you how to invest like the pros and buy property with options. You know what I mean? Just put $1,000 down and you can control millions and millions of dollars worth of property. Or the one that says buy my DVD and become a property developer over the weekend. Build 4 units, sell 3 and keep 1 free of debt. All this sounds too good to be true, doesn't it? Of course it does. So what can Harry and other property investors learn from what happened in previous property cycles? Or will they be doomed to repeat it? My suggestion is to educate yourself and become financially fluent. But be careful who you listen from. Be careful who you learn from. As already explained, find a credible source, not someone with incredible promises. This will allow you to be in control of your own financial destiny. Now, of course, this doesn't mean you should do it all yourself. To become a successful property investor, you're going to need to surround yourself with a team of independent and unbiased professionals, a team who are known, proven and trusted. Then go ahead and take advantage of this new property cycle, because the future is bright for property investors. And I'm going to keep you up to date with how to take advantage of what's happening in our property markets in my future market updates. But it's probably appropriate to remind you that in changing times like we're now experiencing, no one can help you quite like the independent property investment strategist at Metropole. They're a multi-award winning team, and remember, we've got no properties to sell, but access to every property on the market. If you'd like to find out a bit more about what's happening in your local market, or what our research is suggesting is in store, why not join us for a free property briefing at our offices in Melbourne, Sydney or Brisbane? Just click on the link below and reserve your place.